On September 15, 2008, one of the most powerful banks in the world collapsed overnight. It wasn't a war. It wasn't a natural disaster. It was a spreadsheet, and a lie no one could hide anymore. Lehman Brothers wasn't some new startup gambling with money it didn't understand. It was 158 years old. It had survived the Civil War, 2 world wars, and the Great Depression. Nothing, it seemed, could kill it. Founded in 1850 by German immigrant brothers, Lehman started as a small cotton trading business in Alabama. Over a century, it transformed into one of the largest investment banks on Wall Street. By the 2000s, Lehman was thriving, Wall Street was booming, and one investment was making banks more money than anything else: American real estate, packaged and sold as mortgage-backed securities. Banks were lending money to almost anyone who wanted a house, even people who couldn't prove they could repay it. These were called subprime mortgages, risky loans bundled and sold as safe investments. Lehman didn't just sell these mortgage bonds, it bought billions of dollars worth itself. The more the housing market grew, the more Lehman borrowed to buy even more. By 2007, Lehman had borrowed over $30 for every $1 it actually owned. It was a bank standing on a foundation of debt, betting everything on housing prices never falling. Then, in 2007, the housing market cracked. Homeowners began defaulting on their loans. The mortgage bonds that banks called safe were suddenly worth far less than anyone had promised. In March 2008, Bear Stearns, another major Wall Street bank, nearly collapsed and had to be rescued. It was a warning. Lehman didn't listen. Through the summer of 2008, Lehman's stock price kept falling. Investors were losing faith. Executives publicly insisted the bank was fine. Behind closed doors, the numbers told a very different story. By September 2008, Lehman was desperately searching for a buyer. Bank of America looked at the books and walked away. British bank Barclays showed interest, but there wasn't enough time left. Over one chaotic weekend, top bankers and government officials met in emergency meetings in New York. The question on the table: should the U.S. government step in and save Lehman? The answer was no. Unlike Bear Stearns, the government refused to bail Lehman out. They wanted to send a message: not every failing bank would be rescued. On September 15, 2008, Lehman Brothers filed for bankruptcy, the largest in American history. Overnight, 25,000 employees lost their jobs. The shock waves were immediate. Stock markets around the world crashed. Credit froze. Banks stopped trusting each other. What started as one bank's collapse became a global financial crisis. Lehman Brothers' collapse became the symbol of the 2008 financial crisis, a warning about debt, greed, and blind trust in numbers on a page. A century of history wiped out in one weekend.